Hello guys, today we try to see what's the difference between your broker and what we call market maker, because a lot of guys, they don't understand who are even these market makers, okay, and what's the relation with market makers, with broker, with exchange. It all is mixed up. So in this video, in very short video, I will try just to make the difference. Now, when you apply for a trading account, you go for a broker. Now, how the broker makes money is from commissions, and we can have other fees like interest rate if you have margin account. Okay, this is basically the broker. The broker is just he takes your orders, put them into an exchange. But in the exchange, who will do the job? It's the market makers. That's why they are called market makers. It means they make the market. So what is their job? Their job is to facilitate the transactions. It means they put a bid and an ask. Okay? Now, an ask, it means what they ask you to pay. For example, you want to buy Facebook. Let's say it is $160, 1 cent. This is Facebook ask. Now, you find something which is called the bid. What's this bid for? The bid is, if you own Facebook, you can sell it to them at $160. But if you want to buy from them, it's $160, 1 cent. Now you ask yourself, what is this cent for? Why do I ask for more money, even if it is 1 cent? Why did I ask you? It is their job to make a little profit in order to facilitate the job in the stock market. That's their job. That's why sometimes stocks with low volume, you see that the bid and the ask, you find it 5 cents, 10 cents, $1. You can find even $2 or $3 or $4 between the bid and the ask if the volume is low. Now, why the market makers, they do the bid and the ask spread very wide? Is just to protect themselves. Okay? Because they want to buy cheap and sell more expensive, and because there are not a lot of traders, they get scared to lose this bid. Okay? What if they sell at, let's say they sell at $55, they sell it to you, and the bid is, let's say it is $50. Okay, from 53 to 50, we have $3 they get for each share they sell. But you understand that they are getting scared, because the stock can go down to 45 or 40 in someone who is selling a lot of shares, so they can lose money. So that's why they make this bid and ask very large. Understand that market makers are here to help the market run and work, because if there is no market makers, the market will stop, because they facilitate sellers and buyers and they match them. Now, all these is done with software, so it's not them that they do thousands or millions of transactions in a minute. It's not them. It is the softwares that do all this. So everything now is automatic, so the matching, but they give just rules to these softwares how it works according to volume and according to the price itself. So understand that if you want to do good in trading, try not to have a wide spread between the bid and the ask. Okay? For me, for example, most of the time, I will have only 1 cent. So 1 cent, if I buy 100 shares, it means I lose only $1. But let's say if it is 10 cents, do you understand how much you lose if you just buy a stock and you want to sell it 10 cents less? Okay? You are losing $10. But this is hidden. You don't know. Okay? It's hidden. You don't see it. You see it in the bid and ask, but you don't understand that you lost $10. Okay? For the broker, when you buy a stock, let's say your broker commission is $5. You understand that it is $5. You see it because the broker added to your transaction. Now, when you sell, it is added another $5, so you lose $10. But for market makers are hidden fees. You don't see them. So, what I suggest for you guys is always buy stocks that have high volume. And it's very easy. High volume, don't see, for example, it is 1 million or 5 million, 10 million, because this sometimes it's not a really good thing to see it. Because when you say 1 million, if the stock is 5 cents, okay? So this is not what you should count on. You should count always whenever you want to buy a stock. Look at the bid and the ask. How much is the spread? If it is 1 cent, it's very good. Now, sometimes it is 2 cents or 3 cents or 4 cents or 5 cents. This depends on some stocks that are good, but they have low volume. So if you accept that, it will be all okay. Now, thank you very much for watching. Right now, I am going to have a live at twitchtv.com. So if you have time, please join me right now at 10 o'clock Eastern time. After like 20 minutes or 50 minutes, I will be there. If you have any questions, please come and hang with us and let us have some fun. So you find the link here on the top of the description. Okay, on the link here on the top of the description. Just click it, and at 10 o'clock I will be there if God wills. Thank you very much, and see you tomorrow.